plain words, blockchain is just a global platform for assets. This is really the most simple explanation how you can imagine what the blockchain is. If you need an analogy for the blockchain, I can actually give you the internet. So the internet is a global platform for information. Take the equivalent of that for assets, that's what the blockchain is. And what's very interesting, and what's the vision of the community that's working on the blockchain, is actually to digitize many different assets and contracts and put them on the blockchain in tokenized form and then trade them. Now, we have heard this a few times today, so I will just repeat what makes blockchain so special and what are the key innovations when it comes to the infrastructure that makes blockchain very important. So first, one is actually that you can't change anything on the blockchain. This is something very important because after you and I did a transaction, you don't want somebody to actually go and tamper that transaction. So we want it to be safe and secure. We want it to be trusted, right? The second part is actually that you can't really double spend. You can't double spend an asset or liability on blockchain. We're talking about money. So why is that very important? Where if you actually take the example of an email, what I could do if I wanted to send money, to a few people, I can send them the same email with the same money. So I would actually double spend. So if you're wondering why couldn't we have money on the internet before, is because of that feature that you could actually do double spending. So with blockchain, you can't actually do double spending. Very important feature here is actually something called an atomic swap, which was referred to many times today. So atomic swap is a very complicated term, very complicated statement for something very simple. Atomic swap means that if you and I do a transaction, you get my asset at the same time I get your asset. So this means that at the same time we swap the assets. So this is what atomic swap is. And finally, something very revolutionary that was again mentioned today is that blockchain as an infrastructure is decentralized. So it means that everybody can join the blockchain to be part of the community that maintains it, that makes it safe, that makes it secure. And this is something that today and historically was not possible because you had trusted entities like the banks or the central banks who had to make sure that everything is in order, but then all the risk of the infrastructure was actually with them. So these are the key features of the blockchain. And then the question is, what do we do with this amazing technology? What do we do with this infrastructure? Well, actually, the vision is actually to create a global marketplace on top of that infrastructure. So the key feature or the key vision of the blockchain is actually not the infrastructure itself, but actually to create a marketplace on top of that infrastructure. If I have to then go and say, well, we want to create a marketplace, but how does the marketplace actually look today in the blockchain world? We actually have a couple of key players in the digital asset ecosystem, the way it is today, which is composed of the trading venue and the market makers, of the end clients, which at the moment are still retail clients. So the blockchain digital asset world is not really an institutional environment at the moment. We have the projects that actually want to do fundraising, and we have the data service providers, entities that provide analytics. So a lot of what I'm actually trying to illustrate here is that the key ingredients of the blockchain ecosystem, or of the blockchain world, is actually to have an ecosystem and have a lot of different players involved here. And actually taking a look at this digital asset market structure, today you might say, well, that's not really how the ecosystem should look like. Because we actually had today a great presentation coming from one of the digital asset banks, Signal, that actually segregated different players, and those were the infrastructure providers, custodian, issuers, banking service providers, marketplace, and other service providers. So what I'm trying to point out here is that the current digital asset structure is quite different from the one that we're envisioning in the future, and the one that we want to have in an institutional environment where the big financial players can enter and invest in digital assets. Okay. Now, talking a bit more about the future of these digital assets, is that it was quite interesting that we had an exchange today talking about digital assets and exchange of digital assets, when in fact the blockchain enables us something very interesting, is that we can actually trade peer-to-peer. So that means that any person can actually exchange any asset with anyone else, yet we are discussing a centralized environment where actually you cannot trade to peer-to-peer. So what's kind of I'm trying to illustrate again is that a lot of the things that we're seeing today in the digital asset space is not really part of the vision, or it's not really going in line with things that actually enable us to do on the blockchain, which, for instance, in this case is peer-to-peer trading. Okay. So now to try to rephrase the topic a bit differently, is that even though I'm putting a lot of emphasis today to talk about the blockchain, is that in the blockchain, in the future, nobody will really be talking about the infrastructure. And you might say this is a very provocative statement, so can I give you an analogy for that? Today, when you use the internet, I'm quite sure that very few of you would be actually able to explain how the internet works. So if I ask you, if you and I send a message to each other, how does the message actually end up from one person to the other? And I'm quite sure that unless you have a high education in computer science, then you know that what's responsible for that is something called the TCP/IP protocols. But actually today nobody's really discussing something like that. Everybody's discussing the services on the internet and not really the core infrastructure in the background that supports that. So you have to think about blockchain in that sense. That the blockchain is just going to be the infrastructure that supports this global marketplace, that supports the services, but this is not going to be very important in the future. What really you want to focus as we build up different pieces of this digital asset ecosystem are actually the things that are related to services. Because we want to actually, in the end, ask ourselves, how do we want to use this technology? How can we use it to make transactions more efficient, more secure? And that's not something that you will be very much concerned if you're talking about the infrastructure. So I will now try to run you through certain innovations, because we're talking about the future of the blockchain, and I will try to point out certain things that are possible with the blockchain that were not possible before. The first one is, as I mentioned, that blockchain is a settlement infrastructure, the one where you actually do immediate settlement. And what actually comes out of that today is that you will be able to have second-by-second interest rates. So today we have daily interest rates, and if you wonder, well, why is it the case? Why don't we have shorter interest rates? Shorter term interest rates, and the reason for that is because today, in the financial infrastructure, the settlement is done on a daily basis. So that's the reason why we have daily interest and not short term interest. But if you have immediate settlement, that means you can have actually second-by-second interest rate. That means that you can actually lend money for 2 hours, or you can lend money for 30 minutes. You might say, well, that's actually a very extreme example. Why would you actually need to lend money for a very short time period? But actually, a lot of big corporates or banks actually, due to different jurisdictions, just need to lend money for a very short time period, for a couple of hours. But today you can't really do that because settlement is done daily. So what will happen actually in the near future, actually there are already platforms today that enable intraday lending. That means actually that you will have a daily interest rate, like you have today, 6-month, yearly, 10-yearly, 30 years in the case of US treasuries, bonds. But you will also have an hourly interest rate, a 30-minute interest rate, 1-minute interest rate, and so on. One very provocative statement that I'm going to say is that in the future we will not have transaction fees. Again, that's a very strong statement, and I will try to give you an analogy for that. If you had to pay a fee each time you send an email, then nobody would ever send emails. Or if you had to pay a fee each time you send a message on WhatsApp, then nobody would really use WhatsApp. or any kind of other messaging tool. That means that the business model in the future will not be actually based on fees, on direct fees, but the business model will have to be a lot different. One other aspect that I will just touch upon before I finalize is actually related to why blockchain will actually have a very strong purpose when it comes to risk management and monetary operations with regards to central banks. So today what's very interesting is if you actually take a closer look at the blockchain, it's a completely public global information platform, meaning that you can see everything that ever happened on the blockchain. Every single transaction that happened is actually publicly available to everyone. Now that doesn't mean that you can actually know who did that transactions, but you actually can see all of them. This is actually a really big innovation because in today's financial markets or today's banking system, you can't see the transactions because the balance sheets of the banks are actually non-transparent. That means even the regulators and the central banks don't really know what's actually happening on the balance sheets of the different players in the banking system. This is going to be quite a big change, and that's the reason why, actually, from my experience, is why regulators like the blockchain, because it actually gives them transparency what's happening within the blockchain, within the banking system, and actually allows them to make better decisions and manage risk better. So I was told that I need to wrap it up very soon, so I thank everyone for this presentation, and if you have any questions, feel free to ask.